Nazifo here, your friend and your tutor in the next few minutes. Today we are looking at breaker blocks, what they are and how to identify them in a chart. This is going to be a very short video. We are not actually teaching how to trade breaker blocks, but how to identify them in a chart and what they mean. Before now, we talked about other blocks. If you've not watched that video, I urge you to go back to the channel and look for the video and watch the video. It will help you to understand this particular one very, very well because they are somehow related. I mean, very, very related. Okay, from the definition, you begin to realize why you should understand what a breaker block, I mean, another block is before jumping into know what a breaker block is. But overall, they are all very simple concepts in the market, mostly used by ICT and smart money traders. All right, so what is a breaker block? A breaker block is simply a price zone or a price area where a previous order block uh, was invalidated or failed, and that same point begin to act as support or a resistance area depending on the trend of the market. What it means is that a breaker block is a failed order block that acts as a support or resistance to reverse the price. When you have a breaker, another block in the market, which I told you we've talked about and how to even identify them. When you have another block in the market and that other block fails, when it fails, it's still a very important zone for you. You don't just neglect it. It's still a very important zone for you. You're gonna mark it out. And when you mark that failed order block, it's no longer an order block. It's now called a breaker block. Say you have another block here. All right, so we call this an order block. Let me use the word OB, order block, right? Usually what happens is the price would come to this point up and continue selling down, right? So we are saying that in a case where price comes to this other block and instead of reversing, it breaks through, and this other block is no longer an order block. It's now called a breaker block. The breaker block, let me give it a different color so it would, a breaker block BB. So this breaker block now is going to be acting as a support in this case because this was a former downtrend or bearish market. So price will not come, will still come back to this point and start selling up. This is the simple concept of a breaker block in a bearish market. So the bearish order block turns into a bullish breaker block and vice versa. So we have a bullish market, right? We have a bullish market, price is trending up and price created another block here. Price created another block here. So we expect that when price comes down to, when price comes down to this point, it will tap and reverse going back. But what happens when price now comes to this point and instead of reversing, it breaks through it and invalidates that other block? We say that that point becomes a breaker block, no longer an order block. So instead of the other block, the former other block acting as a support where price taps and continue going up, it has been broken. So price will still come back to that point now, no longer acting as what? As as a support, but now as a resistance to push price downward. This is what a bearish breaker block look like. Are we together? So how do you identify a breaker block in a chart? How do you identify a breaker block, a valid breaker block in a chart? Of course, you should have this simple formula that when you are in a bullish market, you are looking out for a bearish breaker block. And when you are in a bearish market, you are looking out for a bullish breaker block. Are we together? It's something simple that should just help you to easily, capture what you're doing. So we will look at what happens at this point before we jump into the main chart. So you have a series of higher high, higher low, higher high, higher low. So all these points where the price are reversing, all these points, we assume we have other blocks here, right? But now price now came down to this place, and instead of reversing here, it broke past and come back to the price comes back to that same point and continue selling down. This is more like a support turning resistance and resistance turning support. In this case, a support turns to a resistance. This becomes your breaker block. But this is something I need you to know, because there is another concept called a mitigation block, which we're going to be talking about in our next video. And it is almost similar. It's still a failed order block, but there is something that differentiates it between from this breaker block. Now, if you look very well, the price came to clear out the high here. Price took out the high here. The external range liquidity here was taken out before the price now came down and swept or broke past, not sweeping in this case, broke past this other block before it went down and started selling. So what forms a breaker block? From the illustration we have here, what forms a breaker block is um, you have a high, a low, a higher high, a lower low. You have a high, a low, a higher high, a lower low. So for a breaker block to be formed, there's got to be liquidity has to be taken from both sides of the market. The external range liquidity here was taken out. Then the low here, in this case, let's say the internal range liquidity was taken out too. Before what price now came to that point where the other block was broken before it came down. So for a breaker block to be formed, both the external or what they call the sell side liquidity and the buy side liquidity has to be taken out. You will understand what I'm trying to say maybe when we drop the next video on mitigation block. But basically, this is how it forms. Price refuses to respect our order block and breaks it, then price and it begins to act as a support or resistance depending on the trend. So let's quickly move into the chart and see if we can find one or two breaker blocks so that you can understand it better. I believe with the three charts, it begins to make more sense. Begins to make more sense here. Let's look for any point where we can find a valid breaker block. Okay, here's one example. Here's one example, perfect example of a breaker block. So this is supposed to be, let's just look at this side of the market. We're not considering the entire trend. We're not doing a top-down analysis. We're just looking to identify breaker blocks in the markets. So this is supposed to be an uptrend. Yep. So what we have is a series of higher high and higher low, higher high, higher low. So at this point, we're expecting that when price gets to this point, it will tap and continue going up. But no, what happens is the price came and broke it. After breaking it, price would go down and later come back, tap to that point and continued selling down. It sold down massively. So this is what breaker block does and how it looks. But let's look at it critically. So here we're supposed to have what a breaker, another block. And you know another block is the last down close candle or a series of down close candle before an up move. So we have three candles, consecutive candles here. So this entire place is our other block. So we can mark it to this point. Yeah, but let me bring it back here. So what we are expecting as smart money traders is that when price comes down from here, it should tap here and continue selling up. But no, what happened is the price came to this point and broke down. So we say that this place that price broke, this entire price area, price zone that was invalidated now becomes our breaker block. So here it's going to act as a resistance. Price is expected to go back to that same point, tap into this place and sell down. And this is what's happened exactly here. So this failed order block became our breaker block. This is one example. Let's look at another one. So here is another good example of a breaker block. Price was trending up, you know. So price came here, went up and formed our other block down here. So price is expected that when it gets down here, it's going to tap and continue selling up. But what happened? Price came to this point and broke it. But after some time, price would go back to that same point that was broken and it continued selling down. So let's still look at it. What happened using our knowledge of other block. So we said our other block is the last down close candle or series of down close candle before what? An upward move. So here price from this place we have three consecutive black candles, which is a sell candle. So this is supposed to be our other block, right? Although price did respect it initially and we still expected that it would come and respect this same point because we have three consecutive candles here. But when it was coming down again, price broke past it because the sellers were in control, or they became more powerful than, I mean, the bears became more powerful than the bulls. So they broke past here, and after some times price would reverse from here. I mean, price would, yes, go back to that same point that was broken, tapped into it, sold, went back again, tapped into that same point, now sold massively at this point. So this is a breaker block. You can still find another example, maybe say one more example, then we can stop for now and talk about mitigation block in our next video. So okay, I think we'll be using example of a bullish market. Let's quickly look at example of a bearish market. So price was making a series of high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. Then instead of making a lower low, I mean a lower high here, it broke past the other block and continued buying. But after some times, it paused, came back to that same point that was broken, tapped, and continued buying upwards. So let's look at what happened here. This is example of a bullish order block. We've been giving examples of bearish order blocks. So we know that our other block is the last up close candle or series of up close candles before a downward move. So here we have our up close candle, this white candle here before the price dropped down here, right? So that is our other block, and we expect that price would come down, come back to this other block and continue selling. So it came respected and so the beat, but later a very strong impulsive buy candle would come, and instead of respecting the other block, it will come and break through it, and after some times it paused and came back to the same other block that was broken, and it tapped and continued buying. So this point became our what, our breaker block. You see our price came back to the same point, and so price came back to the same point, and it's bought massively. So this is the power of breaker blocks. So sometimes you might say you are trading another block trader, you might be waiting somewhere here, say somewhere here, expecting the price would come down to your other block to tap and continue buying. And then you would see that price came and it couldn't, or it didn't. So it gets to your point of interest and it reversed and started going and leave you behind. And you begin to wonder if you are trading wrongly. No, you are not. It's just as simple as you not knowing that price could also react from a valid breaker block. So I need you to understand all of these concepts. After that, we would go into how to trade them using the overall market analysis, how to trade the breaker block, how to trade another block, how to trade a mitigation block. So at this point, I think the video has gotten longer than I expected it to be, and I'm going to be stopping here. If you have not watched the video on other block, I urge you to go back to it and watch it. Then make sure you hit the subscribe button, the notification button, so you get notified when we drop awesome videos like this. I'll see you on the other side.